JB here. JB here. Hope everyone's doing outstanding. Monday, August 11th, 9:06 a.m. on this fine morning talk. Really quick about the market. Some names I'm looking at go from there. S&P slightly in the green. Futures almost flat, I guess. Small caps up 0.2%. Nasdaq just went slightly in the red. Uh, yeah, on the heels of Nasdaq's, I think it was 18th closing high on Friday. The S&P was almost at an all-time closing high. Came within, I think, like a hundredth of a percent. And here we go. This week we're getting data, right? Last week was a lot about well, not too much, right? Earnings, and this week will be we get CPI data tomorrow. Probably, feels like we're back post COVID days when the inflation we were back in. They were raising rates, and inflation was a huge issue. Feels like we're back to that, right? CPI used to be the most talked about data point for the entire month. It pretty much drove where the market was going for that month. And here we are almost back in that scenario. So with very big CPI data print tomorrow. We'll see. Hopefully not. If it is hotter, not too much hotter than expectations. PPI data on Thursday, which if the CPI data comes in really, really hot, then that PPI data will be important as well. Consumer confidence data and retail sales on Friday. And then mixed amongst that is we still have earnings, right? No crazy names this week. Uh, but we do have the likes of John Deere, you have Cisco, and a couple other names. So certainly be interesting. And then, of course, we have the headlines, the tariff headlines, which don't probably not going to go away till October. If they ever go away. So this week we still have tomorrow is supposedly the unofficial true state between the U.S. and China. That's the end of the true state for the trade tariff war. I'm sure there's gonna be headlines later. POTUS is gonna say some things. He already mentioned soybeans over the weekend. Gosh knows what else. You also had news over the weekend or last night that AMD and Nvidia are gonna pay 15% of their chip sale revenues are going to go to the U.S. government. I mean, that's a tariff, right? Except it's just a different way, just a workaround. Any way you look at it's a tariff, but it's not really a tariff, right? So that also is weighing a little bit on those names. And then you have the meeting between Trump and Putin probably happened Friday. Who knows, Zelensky? So there's a lot of things going on. But I mean, to see the market here at right at all time highs or at all time highs, pretty remarkable stuff. If you read the headlines, right? If you didn't have a guide of where the market was, no headlines of that, and you just read the headlines, the economic ones especially, you would think the market was not near highs, right? If anything, maybe we're in a bear market, right? Uh, so, cue up another headline, Market Watch this morning. Dot-com parallels lead to fear of what's next for record-busting stock market, right? And what is the dot-com parallels? Dot-com parallels, I mean, it's pretty good, right? Is that the weighting on the S&P is now the highest weighting for the tech sector since the dot-com bubble. So I don't know the exact, I think it's like 36% or something of the weighting of the S&P is now tech sector names. So that hasn't been that high since the dot-com bubble. So, oh my gosh, get out, get the bomb shelter ready, get ready. We're good. Financial Armageddon is coming. One of these, the parallels, sometimes they work, sometimes they don't, but most times it's just good parallels. And usually it's either 1987 with Black Monday, the dot-com bubble. It's always those parallels because those strike the biggest chords with folks. So, I like this person, Marlon, I forget his name, is on Twitter. We follow each other, but he posted a nice chart and they cited in Market Watch. Great part is like it's all about context, right? And I think there should be like a good a class context 101, right? Because I think comedy jokes, things, everything gets taken out of context. People get offended with things, and there should be like a class, maybe even in high school, there should be a class called context, right? Because here it is. Railroads made up 63% of U.S. stock market in 1881. Obviously, there wasn't as many names trading in 1881, but it helps keep things in context. Like things change, right? I mean, 25 years ago, there was the internet, was in its infancy, right? Now it's mainstream, and there's things that are disrupting the way that people live their lives, right? I mean, back in the day, stick it. You had, I could go on. It's not the rant to do it, but there's so many different things that you used to do back in 25 years ago where that don't exist now, and gosh, yesterday I think my little kid was asking me about beepers. I don't even, and it like brings back the memories, like, oh my gosh, right? And so like obviously if things change in the world and a lot of them are more efficient because of technology, that technology is probably going to be more to drive more revenue, profits, and account for more percentage of markets, just how it is. But if you want to get some clicks and the markets are at highs, you're going to make a headline like that. So Anyway, that's that. I always try to look at things glass half full kind of mentality, because if you don't, it's very easy to get feared out of the market. I have an article I wrote, I think it was 2014. I'll see if I can find it. It used to be called, I think it was called I forget what it is. Uh I'll find it later. But pretty much in a nutshell, it's all those fear articles that get you out of the market, right? And I'll have to find it. All right, so that's that. And also a nice little chart here, and this was over the weekend. Mortgage debt, right? Mortgage debt is less than 1/3 of the housing market value, lowest since 1950. So some folks will say this is because housing prices went up, but I mean, houses prices have gone up over time regardless, right? So to me, you would see a huge spike or move down if that's because of the housing prices. Uh, to me, like I think of course, some of it's because prices went up, but prices, what about 1989 or whatever? Uh, and then to me, some of it or a lot of it is high net worth individuals. Maybe they're buying cash and using cash to buy homes, right? Or they've already paid off their mortgage or what have you. But to me, it's a good thing, right? Back in 2008, 2009, the big issue with the housing bubble wasn't uh, of course it was housing prices, of course it was folks getting mortgages who should have got, but it was the leveraging of it, right? Is folks not, you read the stories of the waitress in Las Vegas who had a house, then use that house to get another house, and use that house to get another house, and then now you lever it to the gills, and then when those houses went gone, all those folks in the same community had similar situations, so those housing values got destroyed. So I, everybody likes to bring up the housing as the next leg to the downside, and you see a lot of headlines the last couple of weeks, and housing supply all-time highs or record highs, and how home sales declining, and all, obviously rates are at highs, or remaining elevated. So it just helps give context to what you read, right? And see, is like, you would think that the housing market's the next leg to drop, and then you see piece like that. It's like, oh, okay. All right. So anyway, overall market, just so that's what we have this week. I don't want to go in too much tangents here. I apologize for that. But the S&P, great stuff. Yes, last week. If you look at an uptrend, the best kind of movement in an uptrend is higher highs and higher lows. And every single session last week, the S&P hit higher highs for the day and then higher lows. And the next day, higher highs, higher lows, even on the red days. So stair step into the upside. We'll see if we get continuation here today. Last week, 618 to 636 on a SPY. Uh, I was looking at the lows from last week and some support resistance. So 628 to 646 is kind of what I move things to. Obviously, doesn't leave as much to the upside. I wouldn't be surprised to see some chop. And then 633, that would be kind of like the line in the sand today. If we break under that, headlines, who knows? If we have China headlines with the US, Trump says something, which I would not be surprised if he does. Then I'll be watching out for a possible area that like get some hedge puts. All right, so that's kind of overall market. Um, Quick on individual names, and Seb, thanks for the CGC call out. I have to go look. I think it was spring of 2024. Huge gains, ACB, CGC, and those have come back down to earth. And now it seems like we're back in this positive news cycle in regards to cannabis and marijuana. Not only the earnings Thursday and Friday, but then you had over the weekend, Wall Street Journal article saying that Trump's weighing reclassifying marijuana as a less dangerous drug. I mean, this headline could be recycled from last year when Biden and that administration was supposed to reclassify it, and so that talk's always gone on. So hopefully, at some point, this gets taken care of, and then I think maybe that starts the next news cycle and moves to the upside in some of these names. And then I keep talking about the culture shift in regards to healthier foods and the drinks, the gummies, the legalization part of it has helped. So at some point, you have to think some of these start to take off. I say it's more of a lotto, even though there are October strikes. But if it starts to break and hold over 160 today, you take a look at uh, the move. Yes, Friday was sold off a little bit. So if you can hold, I may look for some further out strikes, because I remember that last run back in 2024. It's like it looked like it was running, and then it just took off, and we ran for like a week or 2 weeks, and then those calls that were cent, 2 cent were $1, $2. So high risk, but the reward, if we have a similar move or a similar setup, could be substantial. So that's the thought process there. VKTX was actually gapping over 40 in the overnight hours last night, and it's back here about 39 bucks over its 200-day moving average, first time since late last year in November. I'm in a pickle. I put this on the watch list. Do I close the last of my August 50 strikes, which have come back to life, and then start to roll it out? And the issue is the premiums continue to creep up on the further out strikes. So CBOE added some higher strikes today, but not a lot, right? I think 55 strikes for most of the dates. I want them to add much higher speculative strikes. If they did that, maybe I'd lock the rest of the August in and start nibbling on some of those. But for me, I'll probably wait till Wednesday, depending on what it does here today and tomorrow, and then look for the further out strikes. And not a lot, just a small spec position, just because I missed out the big data last time. Fool me once, shame on show me, them. Fool me once, shame on me. I'm not going to do that again. So I'll certainly be in a position until that oral data comes out, which could come out December 31st, for all I know. Quick on other names, JOBY, despite the red end of the week, I think it closed the last four days in the red. It was still only down 3% on the week, but it's back to that trend line. I finally extended the trend line on JOBY. I keep talking about it, especially at the end of the week. Tough to kind of wrap my head around the risk reward for the upside, right? So I mean, even if it gets into the 20s, I still have the October 20s. So for now, I'll probably just hold the last of those like I've been doing. And then if it breaks into the 20s and holds there, maybe I'll look for some more upside calls. But has been a monster, continue to be an monster. I'll continue to watch for opportunities to play for upside. And then Serve Robotics, I say disappointing session on Friday, but if you keep it again in the word using context, I mean the stock was down under $8 or around $8 Thursday afternoon as the shorts pummeled it, trying to like create FUD, right? And then it bounced back. It was actually green at the open, $11 right after the open, then chopped around for the rest of the day. Still love this one for upside. I mean, I'm not going to go on a rant, but I'm not going to add any more strikes either. I still have August strikes expiring at the end of the week. Going to need a big move on that one. And then some possible lottos here. A line, I tried to do the 150s last week. Maybe this is the week. It's done this before. I mean, if you've been on my rants over the years, a line goes on these moves that there's no news, no upgrade. It seems like almost like once the stock buybacks get kicked in, it just melts higher. So not only that, I think it's been oversold from earnings, so I'll continue to look for opportunities on that one. Same MDB was down like 8% last week. No news or catalyst. And you take a look, I mean, the Thursday and Friday, just monster sell-offs. And I was almost looking for spec lottos Wednesday into Thursday, and then thankfully didn't add any. So 50-day moving average 214. I'll possibly look for some calls there. Same with Reddit. Tried to play those calls last week and got out of those despite the stock actually had a solid week. Just the premium is so elevated, it's tough to find decent strikes. So maybe this is the week, finally breaks over 230. TripAdvisor, great Friday. Unfortunately, not enough for my September strikes. Close up nearly 12%. Still like this one for move to 20. And then UNH and Lulu. I don't know why I don't have these charts up here. UNH is up near 253.50. It's like one of these weeks and one of these days are going to be a start of a massive bounce. I don't know if this is it. But if it is, I'm probably going to look for more strikes into next week as well. But I'll look to close some of my weekly strikes out to cover costs and ride the rest. And then Lulu's another one of those names too, just completely destroyed. It's not one of my favorite names, right? Because I always looked at it when it was, especially when it was $400 or $500. Like I'm like, oh my gosh, this is somewhat overvalued. But maybe there's a bounce opportunity here. So even if it remains overvalued, maybe some of these names will bounce regardless. So don't be surprised if I see these. I was looking at the 205s last week. Well, actually, at start of the week, I was looking at 210s, and then it sold off. Then I was looking at 205s. I'm like, if the 200s look interesting today or tomorrow, I might look for some lottos there. And you had Bard, they kept their outperform rating on the stock and lowered their price target, which seems most analysts have done on Lulu. So anyway, let's have a great week, folks. I'll be back on audio later. Rock and roll.